Interesting pattern showing up here. Bitcoin's pulling back after testing higher resistance, but we're seeing some really compelling dynamics underneath. The price action is showing us a clear battleground around that $80,000 level, and honestly, the positioning setup is getting pretty interesting. We've got Bitcoin testing the 200-day EMA and pulling back from around $82,500. But here's what's fascinating. The ETFs just logged their sixth straight week of net inflows for the first time in 9 months. That's $3.4 billion of institutional money flowing in since early April. However, we did see some outflows at the end of the week, over $400 million, which snapped that 5-day streak and caused the pullback from recent highs. The key levels I'm watching are crystal clear. $78,000 is our crucial support, lining up with that 21-week EMA. That's where the rubber meets the road. Above us, $82,500 is acting as immediate resistance, and if we clear that with conviction, we're looking at $84,000 as the next target, potentially extending to $90,000 if momentum holds. Here's where it gets really interesting from a positioning standpoint. We're seeing this tug of war between institutional accumulation and some profit taking. Exchange reserves are sitting at 2-year lows, which is tightening up that liquid supply. The average cost basis for new whales is around $80,300. So if Bitcoin holds above that level, they're incentivized to hold for higher targets. Plus, funding rates have dropped to multi-year lows, and historically that sets up short squeeze conditions. On the flip side, miners have been taking profits, offloading around 3,400 Bitcoin since April 7th. The RSI is flashing overbought signals we haven't seen since early this year after that 36% rally from $60,000. Looking at the liquidation map, there's dense short positioning clustering between $82,000 and $83,000. A strong push above that could trigger a squeeze, taking out those stops. But if we break below $78,000, there's heavy long liquidity that could get flushed out in cascading liquidations. The macro picture is keeping traders on edge with mixed jobs data and some geopolitical tensions. But Bitcoin's been outperforming gold by roughly 36% since tensions began, which is positioning it as a stronger safe haven play. That's what the data is telling us.